Guys, welcome back to XRP Insider Network, where we connect the dots between global macro moves and what it means for your XRP before the mainstream catches on. Let's get into it. If you clicked on this video, you already know something feels different right now. And you're right, because what we're about to break down isn't a rumor, it isn't speculation, and it is not some influencer's hot take. This comes straight from JPMorgan, one of the most powerful financial institutions on the planet. And what they just confirmed should have every XRP holder sitting up straighter right now. Here's the unexpected angle that most people are going to completely miss. This isn't just about regulatory clarity passing. It's about what happens in the 72 hours after it does. The institutional moves that are already being made tell you everything. And by the end of this video, you are going to understand why XRP is not just a beneficiary of this regulatory shift. It is the asset this entire framework was built around. Let's set the stage first because context is everything here. For the last several years, institutional money has been sitting on the sideline. Not because they don't believe in digital assets, they absolutely do, but because they can't legally, compliantly, and confidently deploy capital into a market that doesn't have a clear regulatory structure. That's the real story. That's why the price hasn't done what the fundamentals say it should. The framework wasn't there yet. But here's the common belief that most retail investors have accepted as permanent truth. They think regulatory clarity is always just one more year away. They've heard the promise so many times that they've started treating it like background noise. That's the trap. Because right now the data says this time is structurally different, and JPMorgan just said it out loud. Here's the contrarian take you need to hear. While most people are watching daily candles and debating short-term price levels, the real signal isn't on the chart at all. The real signal is in the legislative language. JPMorgan's own analysts confirmed that the Clarity Act has been stripped down from roughly 12 controversial unresolved issues to just 2 or 3. Think about what that actually means. You had more than a dozen ideological and jurisdictional landmines sitting in the middle of this bill, and the vast majority of them have been cleared. The stablecoin reward debate that has been stalling everything, it's moving. The SEC versus CFTC jurisdiction war that has kept crypto in a regulatory no man's land for years, it's being resolved. That is not incremental bureaucratic progress. That is a bill approaching its finish line. And JPMorgan didn't just report this neutrally. They said the market isn't ready for what happens when it passes. That phrase right there, the market isn't ready, that's not analyst language. That's institutional preparation language. They're warning their clients. The ones who aren't listening are going to be the ones asking why they didn't see it coming. So here's the plan for this video. We're going to connect 3 separate data streams: institutional accumulation behavior, ETF inflow patterns, and a macro treasury signal, and show you why they all point to the same conclusion at the same time. And then we're going to look at what the chart is actually confirming right now, not predicting, confirming. Let's start with the piece that institutional players are watching most closely and that almost no retail analyst is covering. The U.S. Treasury just executed roughly $2 billion in debt buybacks, bringing their monthly total to approximately $19 billion. $19 billion. Now, when the Treasury buys back its own debt at this scale and at this pace, it is not a routine accounting maneuver. It is a balance sheet clearing operation. They are preparing for a significant policy shift. The timing here is not coincidental. Think about the sequencing. You have a legislative framework for digital assets approaching resolution. You have the Treasury simultaneously clearing room on the national balance sheet. And you have the Federal Reserve, which has been constrained from engaging meaningfully with digital assets precisely because of the regulatory ambiguity this bill is about to eliminate. When that ambiguity disappears, the Fed and Treasury can finally operate in this space without legal exposure. That is an entirely new category of institutional participation entering the market. And XRP, as the asset purpose-built for cross-border settlement and interbank clearing, sits directly at the center of that infrastructure conversation. Now here's where it gets really interesting because this Treasury signal doesn't exist in a vacuum. Pair it with what whale wallets have been doing over the last 30 days and the picture becomes impossible to ignore. According to on-chain data, XRP whale accumulation has hit a 10-month high on its 30-day moving average. Exchange outflows are accelerating, which means large holders are pulling XRP off exchanges and into cold storage. That is not the behavior of people preparing to sell. That is the behavior of people who believe the next significant price move is up, and that they do not want to be caught without supply when it happens. Smart money does not accumulate at 10-month highs during regulatory uncertainty unless they have strong conviction that the uncertainty is about to be resolved. Connect that to the JPMorgan confirmation and the Treasury buyback data, and what you're looking at is a coordinated pre-positioning pattern across multiple institutional layers. This is what it looks like before retail catches on. But let me show you something most people are completely missing, because the whale accumulation story gets even more compelling when you layer in what's happening inside the ETF market. Spot XRP ETFs just recorded their largest single-day net inflows in nearly 2 months. The figure was approximately $17 million in a single session. Bitwise led the movement, with Franklin Templeton right behind them. Now, some people are going to look at $17 million and shrug. Don't. Because in the context of where we are in the regulatory cycle, right before a major clarity event, right, that number is a signal, not a statistic. ETF inflows at this stage don't represent retail enthusiasm. They represent institutional appetites being opened in a controlled, measured way before the full green light arrives. When the Clarity Act passes, those inflow numbers are not going to look like 17 million. They're going to look like multiples of that, potentially daily. The infrastructure for institutional participation through regulated ETF vehicles is already operational. The capital is already warming up at the door. The only thing left is the legislative key to open it. Here's the part that should really land for you. JPMorgan, the same institution that called Bitcoin worthless not that long ago and is now managing billions in digital asset exposure, told the market directly that it isn't ready for what comes next. When JPMorgan says that, they are not talking to you. They are talking to their institutional clients, and they are signaling that retail, broadly speaking, has not priced in this outcome. That gap between what retail has priced in and what institutions are quietly positioning for, that gap is where generational wealth gets made. That is the window you're sitting inside of right now. And that window does not stay open indefinitely. When the bill passes, when the headlines hit, when the CNBC segment runs, that's when the gap closes. The people watching this video right now are on the right side of that gap. Now let's talk about what the chart is doing, because the technicals aren't leading this story, but they are confirming it in a way that matters for anyone thinking about their positioning. XRP has moved from the low of around $1.33 up to the current range near $1.41 to $1.42. That move by itself isn't the story. What's significant is what's happening on the weekly time frame. The RSI on the weekly chart is curling upward. The candle body is healthy, meaning it's not a wick-heavy, indecisive candle. It's a real substantive move with volume support coming in underneath it. The $1.20 support level, which has been tested multiple times, has held. 3 of the 4 conditions for a legitimate technical trend reversal are currently checked. The 4th check, the one that confirms this is a real structural shift and not just a relief rally, depends on where the weekly candle closes. A weekly close at or above $1.40, combined with the RSI continuing to curl upward, would be the first genuine technical confirmation that the local bottom is in. That opens a measured move toward the $1.60 to $1.70 range as near-term targets. If price then clears $1.70 with a confirmed close, the macro downtrend from the all-time high gets broken. From there, $2 becomes the first major psychological and structural resistance level, and the 220 to 380 range is where things start to accelerate in ways that will feel very fast when they happen. But I want to be completely clear with you here, because this channel does not hype what isn't earned. Until a weekly candle closes above $1.70, the macro downtrend from the all-time highs is technically still intact. The current zone is appropriate for accumulation. It is not a setup for aggressive leverage plays. The invalidation level sits at $1.20. If that breaks, reassess. But for long-term holders, the accumulation thesis at these levels, backed by the macro signals we've just walked through, is as strong as it's been in a very long time. Here's the thing that I want you to hold on to as we bring this all the way home. You have been holding through SEC litigation, through multiple bear cycles, through a period when the mainstream financial press was actively trying to declare XRP dead. You did not fold then, and right now at the exact moment when the regulatory framework is closing in on resolution, when JPMorgan is telling institutional clients to pay attention, when whale wallets are accumulating at 10-month highs, when ETF infrastructure is already operational and already receiving inflows, right now is not the time to let noise shake you out of your position. The convergence happening right now is not random. It is the result of years of legal work, years of institutional positioning, years of the Ripple team executing a strategy designed specifically for the moment when global cross-border payment infrastructure goes digital at scale. That strategy, so what we call the home run strategy on this channel, isn't built around short-term price action. It's built around being the settlement layer that central banks, financial institutions, and treasury departments actually need when the old rails can no longer carry the volume and speed of a digitized global economy. Every piece of data we walk through today maps directly onto that thesis. The Clarity Act isn't just good news for crypto broadly. It's the structural event that removes the last major legal barrier between XRP's existing infrastructure and the institutional adoption that infrastructure was built to serve. JPMorgan confirmed the timeline. The whales confirmed the accumulation. The ETF market confirmed the institutional appetite. The Treasury confirmed the macro preparation. And the chart is within one weekly close of confirming the technical floor. When 4 independent data streams point to the same conclusion at the same time, that is not coincidence. That is convergence. And when convergence of this magnitude happens in a market that retail hasn't priced in yet, the people who understood it early are the ones who look back years from now and say that was the moment everything changed. You've done the hard part. You held through the doubt. You held through the noise. You held through the cycle. Now the framework is closing in around the thesis you believed in before it was obvious. Stay patient, stay informed, stay positioned. The window between where we are today and where institutional adoption takes this is still open. But windows like this don't stay open forever. Watch the weekly close. Track the legislative movement. Keep your eyes on the ETF inflow data. And come back to this channel because when the next signal drops, you are going to want to see it before the mainstream does. That's the edge. That's why you're here. And that edge is exactly what XRP was built to reward. Mike out.